Still think we're going to new all-time highs. The Dow was up nearly 1%, up 426 points. The S&P was up 0.35%, up almost 21 points. Just back below that 6,000 area at 59.69 there. A little bit under that 6,000 area. I think we'll go back above that area, move to a new high very soon. Again, we're moving into a week where there's going to be very light trading. The markets could easily be manipulated. Money is gone. They are taking an extended vacation. Retail investors, on lighter volume can push the market higher. Historically, the Thanksgiving week, often than not, is bullish. That could very well complete our topping process in the monthly time frame that I've been talking about. The Nasdaq up 0.16%, the Russell up 1.80%, and the VIX was down just under 10%, 9.66% there on Friday. Even though I told you we were going to get a pullback after the presidential election rally, we were going to get the rally to start with, and then I told you we were going to pull back 2 weeks ago. Even though we pull back, we're still in a risk-on environment with the risk model for the S&P 500. Risk line is still positive, and the S&P trend is still positive. So again, I still think we're going to rise up and reach my objective target level in the monthly time frame, moving to the mid 6,000 area or maybe above it as high as the 6,100 range. Very likely, unless we move back to a risk-off environment, but currently we are in a risk-on environment, and again, we're likely going to see the S&P form a divergence. Recent price action on a lot of indicators like maybe the MACD, the RSI, could diverge here with risk on. And again, we'll be watching if we rise on lighter volume over the Thanksgiving holiday week. Intraday, I told you again weeks ago, charts were telling us we were going to have a pullback, just like I told you we were going to get a rally ahead of the presidential election. The signals were warning of it. Then I told you on the 14th that we were going to get a deeper pullback. Momentum had flipped on these signals intraday. That was correct. Now it's flipped back to bullish along with trend signals here. Not all the signals have turned intraday, but a good chunk of them have. I think we're going to resume the advance, S&P to make a new all-time high. I think we could see divergences begin to set up going forward, again, if we can reach my objective target level quickly or if we do it a little bit slower, but we'll be watching for that objective target to be reached. I think it's likely going to happen there in the monthly time frame. We're seeing signals turn right back to bullish. Again, the signals correctly warned we are going to get a bigger, deeper pullback. We did. Now, again, they're turning back up. We've seen momentum this last week here turn back up and trend signals starting, for the most part, to turn back up. Again, we had the divergence on indicators warning. I think we could see a larger divergence like some of these other divergences at the July peak and some of these other ones. We could see a larger divergence develop here. And I think the advance is going to resume to my target levels. Here we saw momentum flip, but we haven't seen the trend flip yet. But the balance of power has turned back to positive. So again, I think that the advance is likely to resume. End up seeing Nasdaq fill the gap, and then we'll see if it can move to a new high. I think the S&P will move to new all-time highs. Signals correctly predicted momentum flipping. We were going to get a deeper pullback. We did. I think they're suggesting the advance is likely going to resume. When I predicted the rally ahead of the presidential election, we saw the cloud here flip back to bullish. I predicted a pullback based on the extremes on the 60-minute chart. And again, we saw that happen. But here the cloud, we just came back to the lower end of the cloud here. We found support there. And again, now we're bouncing. So as long as the cloud is green, the advance can resume. So we pull back. Again, oscillators still positive, now turning back up. So I think the advance will resume, moving closer to my target level in the monthly time frame. Please support the channel with the link directly below that allows me to be able to provide you this information. If you like the charts, you like the indicators, please consider helping out by supporting the channel today. The money made channels is mostly through sponsors. I don't choose to do that. Turn all those offers down. I don't want to sell you a bunch of stuff that you don't need. So I just ask that you just do what you can to help out. I do need to hear from you in order to make it work, so please consider partnering with me by supporting the channel. Follow the link below. It'll take you to a secured site, and you can donate any amount you want or make it a recurring donation. If you do that, I thank you. If you could take a moment to do that, step up to the plate and help out, I would really, really appreciate it. I thank you for that. If you didn't watch my other video, this week, again, I talk about the recession warning signs in 2007, comparing them to the warning signs we have right now. Link that video at the end of this one. You might want to check that out. Fed back then was telling us we weren't going into recession either. So then they panicked when they realized their soft landing baloney wasn't going to play out. They were peddling that propaganda back then too. Look, we had the VIX drop nearly 10%. It dropped back below the 10-period moving average. It rallied up to the 50. The VIX moved up to the 50, and then it turned down. That gave us the pullback. I told you that, again, VIX can come down here. I told you up here that if we get a rally, as the signals were suggesting with the presidential election, we could see the VIX drop back to the 200. It came back there, and I told you to be watching for a drop back below the lower band here. The band's telling us something's getting ready to happen. The 50 is remaining above the 200. So again, it's suggesting we're likely in a topping process. Still think we go higher. New all-time high on the S&P 500. Do we meet that objective target sooner or later? We'll see what happens. We have very light trading volume this week. The market can easily be manipulated up or down, so do keep that in mind. And I was predicting a bounce and a rally off of the 50 period ahead of the presidential election and the Fed meeting, and predicting that VIX would drop back below the 50, which in fact did happen. The VIX will come back and fill this gap, but again, it's probably going to do more consolidation down here, and we'll see if a divergence develops on the RSI or the MACD. The VIX RSI turning down at the 50 level. So again, I think the rally continues. I continue to believe that we're getting a blow off top, and I don't think it's done. I think we go to new all-time highs. I remain bullish. Quickly, two things will tell me when the market rally has concluded and a reversal, and that will be when the S&P volatility oscillator gets back above the signal line, and then another confirmation will break this downward trend line. That happens, the S&P trend direction will go into the negative region, and if it goes into the negative region and stays there, you'll start a new downtrend like we did in 2022 over here, or get a major correction. We're going to get a reversal and see a big drop. 20%. That's what's happened at the last two tops. You've dropped about 20% at a big bounce. I think we're doing something with the volatility oscillator like we did in 2022, where again, it's turned down, it came back up, and it had one more push down, pushing up to new highs just before it pushed up above the signal line, and the trend signal ended up moving into the negative region. The volatility oscillator, I think, is doing the same thing right now. It had this move down, it turned back up, moved down, it turned back up, and it's pointing down right now. I think that's suggesting we're going to see the trend extension move up towards my target level in the monthly time frame. One final push higher, and then I think we're going to see this push above the signal line. Once that happens, and it'll likely happen probably within 2 or 3 weeks, more likely 2, that first or second week of a reversal in the market will likely be validated with it moving above the signal line and then later moving above the trend line for volatility. The S&P goes down, volatility goes up. The trend goes negative like it did over here in 2022. So again, I think that we're going to see the volatility drop, okay? I think the VIX is suggesting that as well, my volatility oscillator, and I think we're going to see this trend come back up and give us one more reference point of a divergence, and then I think it's going to go negative. That's what I think is going to happen. I continue to believe we're going to reach my objective target level, the volatility oscillator and the S&P trend direction suggesting that as well. In mid-October, we are going to get a sell-off. We did. We formed the triangle. I told you, I thought we were going to get a push up with the triangle, but I told you the triangle can break in either direction. It broke down. The signal was correct. We hit the 50 period in the daily time frame, and we hit horizontal support, forming this bullish divergence ahead of the election and the Fed. I told you we were going to get a rally. Back up and back test the trend lines, and we can move to new highs. We did. Why am I looking for new all-time highs? Because we haven't reached my objective target, the mid 6,000 area, right around 6,040 or so. My target in the monthly time frame. Overthrow it and reach the trend line in the weekly time frame in the 6,100 range. Overthrow the monthly trend line. Certainly possible. My target is, again, between 6,040 and 6,199. Move into the 6,100 range. There, I think the S&P will complete the blow off top. Didn't do that over here. The rally I was talking about could be possible with the triangle. We went back to support. We got it over here with the presidential election, which again, I predicted we would get this rally ahead of the election because of the bullish divergence and because of the 50 period and horizontal support in the daily time frame. We got this divergence at extremes, and I told you again, Friday, November 8th, and then again on November 11th, 2 weeks ago, that we are going to get a pullback. We did. At the time, I didn't know if it'd be a shallow pullback to the gap support or gap fill, or if we get something bigger. But then Thursday, November 14th, I told you my signals in the intraday time frame, momentum had turned bearish, and they were telling me we're going to get a bigger pullback. I warned you about that. Thursday, November 14th. On the 15th, we gapped lower. 14th was the day that Powell spoke and said, we're in no hurry to cut rates. The economy's wonderful. Inflation could begin to tick back up and have to raise rates. The Fed, go watch my last video. I went through this. The Fed is oblivious, just like they were oblivious, telling us the inflation was transitory. We were rising, towards 9%. They were blind by it. And I talked about in 2007, they're doing the same exact thing that they did in 2007. Go watch a video. I'll link it at the end of this video. Show you exactly what happened in 2007. The Fed is repeating their same mistakes. Recession is about to happen. Now, again, we're about to get a blow off top here. In my opinion, it's not done yet. Not reached my objective target, but I told you again we were going to get this bigger pullback. We did. And then I told you we hit the 200 period here. We came to gap support. To the 20 period moving average in the daily time frame, and I told you again we were going to get a bounce. We did. The bounce, I told you we formed a bear flag, and if that was so, we could still come back and hit this trend line, but I told you whichever way it played out, again, I still think we moved to new all-time highs because we haven't reached my target levels. I told you what I thought, and I thought we would get the rally back up to fill the gap and resume the advance. So I was looking for those green bars on the awesome oscillator, which we got on Friday, which you'll see if you watch this video all the way through. Now, again, I'll be watching. Do we get a brand new divergence here? Do we build upon this one over here? We'll be watching to see how it unfolds. But I do think we will move to a new high and get a divergence. Maybe we get a brand new divergence, but still lower than this extreme over here. Could play out that way. We get a larger divergence with the peak over here. So again, signals have continued to make amazing calls here in the 60-minute time frame. The sell signal here, the bullish signal here. Again, the reversal signal here. We reached extremes. I talked about this at the time. We reached extremes and bounced off to our 200 period at gap support. Showing the gap at 59.50. Again, we closed above it. Again, we're likely going to see the market try to drift higher on lighter volume during the Thanksgiving week. Have a short trading week. We have an abbreviated session. Black Friday. I'm not sure on that, but I think it's an abbreviated session. Now, I told you that if we lost the 200 period, you have this trend line directly below the gap fill and is right there as well. And I have the guts to tell you what I think, and I told you I thought we would bounce again to rebound. I told you either way it played out, again, I'm looking for a new all-time high to complete the blow-off top, reach the monthly trend line, and maybe that trend line in the weekly time frame. Now, I told you about this channel. As we had that drop with the Fed, again, my signals predicted that we would get that bigger pullback. We did. We bounced off the 200. We had this channel form right here. And again, I told you we were breaking out, and that was a back test at the 200 period. And again, that's why I believed that we were bottoming out there with this channel. Again, I have the guts to tell you what I think, and I thought we'd come back, fill the gap, and resume the advance with this breakout and back test of the channel. But I told you there is still risk that we come down here if we lose the 200 to try to come back and either fill the gap or test the trend line. Told you again, I thought the other scenario would play out, but warned you if it did not, if I was wrong about the breakout of the channel, we could still come back and hit this trend line right here, and again try to fill that gap down here. It can still play out that way if we go back down to test the trend line, not necessarily filling the gap, but going back and testing the trend line. Although we could do it, but like I said, I continue to believe we're going to drift higher. I was looking for the green awesome oscillator bar on the daily chart. We got it on Friday. It suggests to me that momentum is moving back up with this bounce that we got off the 200 period and the breakout of the downward channel here on the 60-minute chart, the breakout and the back test. And then the big rebound back up to fill the gap at 59.50. Not only were we bouncing up the 200 period with that first move, but we were bouncing up the 20 here, and again went back and tested the 20 a couple of times there, again with the breakout and the back test of that channel on the 60-minute time frame. But I told you I thought this was going to be the case right here, which I still think. And again, we're likely moving to the upper boundary of this wedge, and again, rising wedge over here, it broke down, but then we bounced off horizontal support in our 50-period moving average. We formed bullish signals ahead of the presidential election. We got the presidential election results, and the market rallied big time. But I told you 2 weeks ago on the 8th, on that Friday here, and then again on Monday on the 11th when we actually peaked, I told you the market was going to pull back on those 60-minute charts, and we came back to this gap support, came back to the 20, came back to the momentum cloud. This trend line is still in play if off on lighter volume, and we're moving into the Thanksgiving holiday. The market can easily be manipulated up or down, but it's likely going to go higher. Tell investors likely push it higher on lighter volume as the big money institutions take an extended vacation. I think we're still going up here, and I think we'll likely do it on lighter volume. I think we'll see a divergence develop here in the most recent price action, MACD, and I think, again, the RSI is likely going to develop that as well. We may just reach a new extreme with the RSI. It could play out either way. The divergences have marked pullbacks over here, and then in July, and again, diversions tipped us off to the top. If we go higher, reach my objective target levels, reaching the new all-time highs, which I believe we're going to do, completing a blow-off top, I think the next off, if we reach my objective target levels, could allow the weekly charts to play out here, and that could happen very, very soon. Again, I told you, again, over here, this is what I thought was going to happen. Just like I told you, I thought we'd bounce off the 50. I told you I thought we'd bounce off the 20. So far, that's the case. Told you we thought we'd fill the gap at the 59.50 area. We did. So I'm looking for a divergence here on the RSI and the MACD in the more recent price action. I was looking for that green awesome oscillator bar in the daily time frame, which we got on Friday. So I keep saying new all-time highs to reach the target level with the blow-off top, completing the blow-off top there in the monthly time frame. So why do I think the rally is going to continue to new all-time highs? Looking for the rally to continue after the pullback. Even though I predicted the pullback, I told you we are likely going to still see new all-time highs because we haven't reached my objective target yet in the monthly time frame, and I was looking for diversions here in the daily time frame with the awesome oscillator. I was looking for green bars. We got it. I predicted we'd pull back, but then we would see green bars. Told you the awesome oscillator moves slightly higher, so we'd likely see a brand new divergence here. And here we never reached my objective target that I keep talking about in the monthly time frame. So again, for that target to be reached, getting the green bars I was looking for, again, we're likely going to see a divergence develop. I think we move towards the 6,040 area, that mid 6,000 area, and maybe even overthrow it, moving into the 6,100 range, which is likely that we're going to move towards it, reach the target level in the trend line there in the weekly time frame. Now, ahead of the presidential election results, we had that bullish divergence on the 60-minute chart. We're bouncing off of the 50-period moving average and this 10-week moving average. Again, talked about that at the time. We saw the pullback with this red bar, but it only gave us pullback to the 10-period moving average in the weekly time frame. And then we saw green bars resume. I talked about that with the presidential election. I told you we're getting a red bar here this week. Now, again, I still believe we're going to reach my objective target level in the monthly time frame. Complete a blow off top, but again, I told you I'm looking for a divergence to complete here. Oftentimes, you'll get the red bar, and sometimes with the first, second, or third red bar, you'll get a rally. Now, we did get a rally this week. That could be a counter-trend rally if close but no cigar, we don't reach my objective target, just as we will, but oftentimes the second or third red bar, you can still see first, second, or third bar, you can still move to a new high, completing a divergence. It happens. Other times you get the red and, you start getting the selling, like we did over here in July. Sometimes it plays out that way where you start getting the red bars and you still end up moving to a new all-time high, which I think is going to be the case. We're seeing the stochastic and the weekly time frame turn back up. MACD, again, still has this nice triple divergence along with the awesome oscillator. So, again, I still think we reach my objective target, but, again, I think the time is short. I do think the S&P will rise to a new all-time high and reach the 6,040 to 6,199 range, somewhere in there. And then I think you got a really good shot at a top surrounding that trend line in the monthly time frame. I want to continue to remind you, I'm still looking for new all-time highs. Yes, I'm looking for a top, but I'm still of the belief that we're in the final stages of the blow-off top. I want to remind you, my signals remain bullish. We are forming the divergences, but the signals remain bullish. So I think we still continue higher to try to reach my objective target levels there in the monthly and the weekly time frame. Quickly, again, I believe we're going up to this trend line. We're just shy of it right now. This is the long-term, nearly 100-year-old trend line. We got to a high right around 6,017. The trend line's coming in right around 6,040. We may even overthrow it and hit the trend line in the weekly time frame. This is where we're headed. Now, either this trend line or the other trend line just above it on the weekly chart will likely stall the advance and probably terminate the rally. We go into the final week of the trading month here. We haven't reached my objective target yet, so we very well could reach it, even overthrow it, because we didn't reach it earlier in the month. Still likely going to, and again, we're going into the Thanksgiving holiday. We could see light volume. We can advance on lighter volume and slam up into this level. We can continue to build upon the rally. I think we will. We don't reach it here in November. Again, in December, it is just slightly higher. Here we're in the mid 6,000 area, right around the 6,040 area or so, as I've said. And then if we go a little bit longer, then you're looking at the upper end of 6,000. And again, we could even overthrow this level and hit 6,100. The rally is going to get terminated here. I said in my previous video in 2007, we got an immediate 20% drop. 2001, just ahead of the Fed cuts, we got an immediate 20% drop, nearly 20% drop. You're going to see that here, and I think you're forming a massive head and shoulders. I think you're eventually moving back towards the 2022 low. I think you're going to end up forming this massive head and shoulders. I think it will play out, and I think we will see take us back to test a pandemic low and probably take it out, where I think we'll complete a bear market. A bigger picture. Market will soon begin to price in the recession. Start seeing the market tank. It'll peak. It'll start tanking. It'll start ushering in the bear market. The Fed will panic. We'll see an emergency meeting out of the Fed. When they do the emergency cut, the market will get a bounce. Then eventually it's going to make its way back down here to the 3,500 area here. Likely bounce there. But again, you're going to see likely a reversal surrounding this trend line, or just overthrowing it will complete the blow off top. Again, it is very possible that we move to this blue trend line, which is perfectly parallel, these peaks over here to the low here to the low here, and again, move up here, moving towards my target range, and even that trend line slightly overthrowing it and reaching this level here. Taking us into the high 6,000 range, or even on into the 6,100 range, depending on when we come into contact with it. Then these divergences will begin to play out. Again, continue to believe, as I told you, these rallies, we're moving to new all-time highs. Here we did it. Told you over here, We can move back up to the trend line, overthrow it. If we do, then this other blue trend line comes into play. We overthrew the black trend line. Continue to believe we're going to move to new all-time highs, but I think, again, the time is short. If we do this, it's going to create total complacency. The bears, well, they've had a massive short squeeze against them. Damn, we're going to move to new all-time highs. Bears, front of the towel, the bulls are complacent. They think that they're indestructible and that nothing is taking this market down. And again, going higher is going to create even more complacency, and we're likely going to see a top. We're likely very, very close to it. We haven't reached my objective target levels yet. We're likely going to. I think we're going to top in 2024. Yes, I do. First, I think we're going to reach new all-time highs here and reach my objective target levels. I can't stress that enough. I'm looking for a top. Some people or the fact that I keep saying we're going to make new all-time highs. Hey, we haven't reached my objective target level yet. We're likely going to reach that trend line. Now, maybe we fall short of it. I have the guts to tell you what I think, and I think we're going to reach that level. Signals remain bullish. I think we're moving to new all-time highs. I can't say it any clearer than that. Do I think we're going to form a top? Yes. Do I think we'll get a reversal? Yes. Do I think we're going to in a bear market? Yes. Go watch my last video. Now, I still think that, again, we're in the final we're getting a final climax high. It's going to be followed by something extremely ugly. So with this blue trend line, I'm looking at the upper boundaries of the peaks made earlier in the year. And again, this area intersect. If I excluded the shadow here, I've included it. It's a little bit higher. If I exclude it, they intersect directly overhead. So I'll be watching that. Now, it's not just the RSI and the MACD that are forming these negative divergences. It's everywhere in the weekly time frame. We've got a triple divergence here with momentum. It's already rolling over. Rally can continue. It can remain at extremes for an extended period of time. You can see the divergence here clearly. Divergences have marked turning points. Here we got a triple divergence. Longest reversal signal in technical analysis is a quadruple and a triple divergence. Same thing going on here. It's all over the place in the weekly time frame. Now, the Nasdaq has not filled the gap. The S&P filled the gap at 2950. The Nasdaq did not fill the gap here, 29,000 or 20,900, rounding up. Again, as what I'm going to be watching for is with the next rally, do they diverge or do both of them move to new highs? I believe S&P will move to new high. The jury is still out on Nasdaq. Sometimes they diverge at turning points. They did down over here. S&P moved to a new low. Nasdaq got a higher low. They did back in July. They did back in January of 2022. They diverge all the time. So again, oftentimes at turning points for short-term moves or sometimes for longer-term moves, we'll be watching. So with the S&P, it's still possible we come down and fill this gap right here, but we're at a major trend line of support. At the rally that I was looking for surrounding the 200 period moving average, although we never did fill the gap at 20,227. I told you I thought we'd bounce. We have, but again, still the possibility that we fill this gap before all is said and done. Again, we're going into a light trading week where it can easily be manipulated up or down. My thinking is we're going to go higher. If I'm wrong about that, I want to show you the next level of support, but we're hitting a major trend line, bouncing off of a trend line with these lows at the 200 period moving average. Again, I'll be watching if the rally can continue. Do we take out this high? Warned you of the pullback with this divergence right here 2 weeks ago. Warned you that we would get a bigger sell-off previous week there on Thursday, and we did, and we had the sell-off surrounding Powell's comments of no hurry to cut interest rates. We're bouncing off the trend line here, off the 20 period moving average with Nasdaq. I think we're going to see momentum end up forming a divergence before all is said and done, or a confirmation of a lower high if Nasdaq diverges with the S&P 500. S&P filled the gap. Nasdaq has not done so. It's stalling at the 10 period moving average. Again, S&P did not tag the trend line. Nasdaq did. So again, I told you I thought we'd get a bounce. And again, we still have that gap fill if the pullback is not done yet. My guess is it is, and I think we try to go fill that gap and maybe come up to the upper boundary of the channel, or the rising wedge here, if we see both Nasdaq and S&P make new highs. Again, will Nasdaq form a divergence on the RSI and the MACD right here, or will confirm a lower high? We'll see. But again, you get this trend line from the August low connected to our low just before the election rally. Again, we bounced off the 50 period, told you we were going to get rally ahead of the election and the Fed meeting. We got a big move up, but then gave it back, came back. Didn't quite fill this gap. We may not. We're finding support at the trend line and the 20 period. We have the gap directly overhead under 20,900. Be watching to see, do divergences develop? Do we validate a lower high? But I do believe this gap is going to fill. My guess is we put in the short-term bottom, as I said earlier in this previous week. And rising wedge patterns, we had the pattern expand. We had a trend line right here that broke, but I told you there was no confirmation, no follow through, and that's why I told you we were going to get a rally with the election. Again, off of the 50 period, the 60-minute charts told us we were going to get a rally. They were correct. That's now evolved into a larger channel or larger pattern here in the form of this rising wedge. So again, going to be watching. Do we end up with a lower high or do we go a little bit higher? Now on the weekly time frame, the peak right here from 2 weeks ago. Now here on the weekly chart for the Nasdaq, I have a perfectly parallel channel from the pandemic low in 2020 to the 2021 high to the October low. Perfectly parallel channel. Last time we hit it, we dropped back to this trend line right here from the October 22 low to the October 2023 low, and we bounced off of it. Now we've come back up to this trend line, and it's kind of hard to see, but we are just a fraction under it, just barely under it. Again, we might come up here, we might even overthrow it a little bit, maybe get a topping tail or something, but again, going to be watching to see, do we get a lower high with this next rally with Nasdaq? If the rally can continue, I think it will. Do we get a lower high and it diverges with the S&P? And this is all she wrote right here. Or do we push up a little bit higher and they both form divergences with their indicators? So we'll be watching to see how it unfolds here. And I moved this trend line so you could see, again, that we're just slightly under this trend line. But I want to show you this trend line, moving it back, that we just slightly overthrew this upper boundary. We could overthrow this boundary and still go a little higher. So again, we'll be watching this area right here, but it could be Nasdaq has already peaked and it's going to end up diverging with S&P. That has been the case. That happened back over here. Nasdaq made a lower high. S&P made a higher high in January of 2022. The October low, Nasdaq got a higher low. The S&P made a lower low. They often diverge at turning points. They did back over here also at the July peak. So just some things to be paying attention to, because again, it's possible to rally to new all-time highs on S&P and not with Nasdaq. Well, Nasdaq is just slightly below this trend line, ever so slightly, just falling short of it, just by a whisker there. Nasdaq just below this upper channel line here in the monthly time frame. So again, still reach these monthly trend lines that are directly overhead for Nasdaq and S&P 500. Nasdaq also in the weekly time frame got a red. It got a red oscillator bar. It's forming a divergence, just like on the MACD. Again, we're bouncing off the 10-week moving average with the presidential election results. And again, we've pulled back. Watching, do we get a lower high or do we go a little bit higher? Move closer towards the trend lines. Those monthly charts. Got the diversions here. We got the red bar. Again, sometimes with the red bar, you could rise back up and get a counter trend rally, or with the lower high, or you could get a higher high. But again, the divergence is under construction. You see a lower high or a divergence established the first, second, or third bar over these next few weeks here. So again, we're rallying up this week. We got a red bar. It may continue. Fill the gap and get a lower high, or to try to make a new high on the Nasdaq weekly chart. I told you I was looking for green awesome oscillator bars to show up in the daily time frame, and it did. We got it on Nasdaq, we got it on the S&P, but Nasdaq still has red here. We got blue bars, but we still are stalling at the 10 period. We still have a red cloud. So again, it's struggling. S&P's cloud is green, but we got these green bars. So I'm going to be watching to see if the green bars continue and if we form a divergence or go up higher and see a new peak here and form a divergence right after that. One or the other, something like that, or a divergence right here. And then again, I'll be watching those weekly charts. I told you I was looking for green because we saw the awesome oscillator move to a new high. So again, likely going to get a fresh divergence or confirmation of a lower high if it can't move to a new high, if it ends up diverging with the S&P 500.